Well, Casey, it's time to talk about money. Can I have some?
No.
Okay. You're so stingy. Today, we are going to have a conversation with Vlad Tenev. He's the CEO of Robinhood. Robinhood, of course, is the financial trading platform that is beloved by young people, that is used to buy and sell stocks and futures and options and now crypto tokens and all manner of things. And I'm excited for this conversation because on some level, it makes me uncomfortable.
Mm-hmm. And what makes you uncomfortable, Kevin?
So just to put some cards on the table, we've talked on this show about the fact that we are rapidly, in my opinion, becoming a nation of gamblers. We now have many tools that allow people to place bets on various world events, prediction markets, sports betting, crypto platforms, all from the phones in their pockets. And while I am not opposed to all forms of gambling. In fact, I enjoy, a little gambling myself now and then. I do think that opening this stuff up and making it so accessible, especially to young people, has had some pretty harsh consequences.
It has. I first met Vlad in 2013, right as he was getting ready to launch Robinhood. And in the story I wrote for The Verge, I wrote about the core innovation of Robinhood at the time, which is that they were not going to charge for individual trades. At the time, companies like Schwab or E-Trade would all charge some amount of money if you wanted to buy or sell a stock. Robinhood completely changed the game by saying, we're not going to do that. And what I wrote at the time was, this is going to encourage a lot of trading that could make people lose a lot of money. And so I had that discomfort with Robinhood from the beginning, and I would say that has only grown over time.
Yeah, and speaking of growing over time, Robinhood itself has grown a lot since then. It is now a giant public company. It's worth $52.2 billion as of this recording. Vlad is a billionaire now. And I think it's time to have this conversation with him directly, because people in America have just a lot of concerns about the fact that we are now making it very, very easy to bet on all manner of things, whether it's stocks or sports games or crypto meme coins, from your pocket.
Also, in the spirit of disclosure, I want to mention that Robinhood owns a news platform called Sherwood News, and last year they briefly syndicated some platformer content, so that happened for a few months. It's not the case anymore, but just thought I would point that out.
Now, were you paid in dollars or meme coins for that?
I insisted on cash, actually.
So yeah, let's bring in Vlad Tenev. Vlad Tenev, welcome to Hard Fork.
Thanks for having me.
I want to start by asking what might be a dumb question, which is, what is Robinhood? Like, I remember a few years ago during the whole meme stock craze, I opened up an account. Basically, you guys were a free mobile brokerage. You could use it on your phone, buy and sell stocks.
Yeah.
Recently, I logged on to Robinhood to see what had been going on there, and there are just a ton of new features. You can do options trading, futures trading. You can buy meme coins. You can get a credit card.
Yeah.
You can do prediction markets.
Retirement.
You can even, you can bring over your 401k and invest it on Robinhood. So what is the product today, and do you see yourself basically offering all of the services of a traditional bank?
Yeah. So, long term, we want Robinhood to be the place where customers can buy, sell, trade any financial asset or conduct any financial transaction. So if you think about it, it started off as trading. The real innovation was bringing commission-free mobile trading to market. And I'd say the business strategy is expanding beyond that to all of consumer retail financial services.
Yeah, I want to just pin down a little bit more your vision of where the future of investing is headed. You wrote a piece in the Washington Post last month where you argued that the next big sort of financial revolution is going to be crypto, and not just sort of trading crypto coins, but tokenizing real-world assets. What did you mean by that?
Yeah, so how do you guys feel about crypto? Are you crypto skeptics, or are you sort of like fundamental believers?
We're pretty skeptical. I think
Yeah.
we had the experience in 2021 of seeing everyone get very excited about it. We got sort of excited about it ourselves. And then we saw a lot of people lose money and not very much interesting stuff get built.
Yeah.
So we felt burned.
So I'd say like the skeptical narrative around crypto is it's all meme coins. And a lot of these things aren't tied to like real world productive assets that generate value or revenue. And I think there's a reason for that. And the reason is that by and large, it has been illegal to connect crypto technology to things of value. If you connect crypto technology to a productive asset, it's termed a security, and that's governed by the Securities and Exchange Commission. And I don't want to bore by getting too much into the details, but it's not allowed to actually connect crypto to things of value. Ergo, what you're getting is it's connected to things that aren't securities, which end up turning into variants of meme coins. And I think the way to solve that is to actually create a framework where you can connect crypto technology to productive assets.
What would that look like?
Value.
Like, what's an example of that you see playing out in the next few years?
Well, in my op-ed for the Washington Post, I talked about private companies. Like, it's silly that you can buy meme coins, but OpenAI and SpaceX, which are like big, innovative companies, that most people would tell you the risk of them going to zero is not super high right now at this point. But the current kind of regulatory environment makes it very hard for the vast majority of the U.S. population to invest in these things. So I think there's multiple problems, but crypto can solve that from a technology standpoint. And I think there's benefits to public equities and stocks being on blockchain technology as well.
I mean, so let's press on that a bit, because I remember the era of the initial coin offering, when companies would start up and they would create a coin and they would make that available, and the basic idea was exactly what you just said. Is like, well, now you can sort of have some of the upside if everybody winds up using this token for whatever. It doesn't seem like that led to a lot of positive uses, did it?
Well, that was just shut down very, very quickly. I remember like the Telegram ICO was sort of the hallmark event that brought a lot of scrutiny and brought a lot of attention.
Well, and there were also just a lot of scams and rug pulls and people, not operating in good faith. Like it attracted a lot of people who were pretty, malicious about how they used the ICOs.
Yeah, I think that's true. But I mean, you see that happening still in like the meme coin environment. And
I'm just saying, I don't think it was just the Telegram example that got people to be skeptical of it.
Yeah. I think with any new technology, we have to like mitigate the vectors of abuse and minimize them. And there's definitely ways to do that. But I think the technology should be allowed to flourish. Like the benefits are so extreme that I think it would be silly to not embrace it and allow it to fully permeate the financial system.
Got it. I want to talk about your recent efforts to get into the prediction markets business and even the sports gambling business. Earlier this year, Robinhood was considering a move into sports betting. You rolled out this market for predictions on what you called the Pro Football Championship, which I guess is because you're not allowed to say Super Bowl without incurring like huge fines from the NFL.
Are we allowed to say Super Bowl?
All right, we'll bleep that.
I don't think you are. Yeah.
Okay. Let's just say it rhymes with Cooper Troll.
Mm-hmm.
I don't think you can say the big game either.
Oh, not the
So
man.
the big game.
So you
the large contest.
So the large contest. So you rolled this out to roughly 1% of your users, and then the Commodities Futures Trading Commission, the CFTC, asked you to suspend that market. They had, quote, serious concerns. So what happened there, and where do things stand with your entry into sports betting?
Yeah. So I would, first of all, distinguish between sports betting and prediction markets. I think that mechanically there's some similarities, but they're different things.
Wait. Hang on. If I'm betting on a prediction market for who is going to win this football game, and I get paid if the team that I bet on wins, and I don't get paid if the other team wins, how is that different than sports betting?
I mean, I think that I think the distinction is, I'll explain. I think that you get into a little bit of like a philosophical discussion with this stuff, because there's people that believe any market is betting. First of all, I think prediction markets are the future of not just trading, but also information. I think that, and Robinhood I've been a big believer in the power of prediction markets for a long time, kind of a student of them. And I think prediction markets should be live for everything. One way I think about it is it's kind of like the newspaper, right? So the newspaper has economic value. I mean, people go out and buy
it. Sure does. nytimes.com/subscribe.
Yeah. And it has various sections. It has the front page. It has the sports section. people pay for it. And people pay for broadcast news too, indirectly, in the form of advertising. So what prediction markets are is the news faster, right? And in some cases, you get it even before it happens. So the economic value of that as a product and service should be at least as high, and I would argue strictly greater than the news after it happens.
Yeah, I would say, like, I understand the arguments for prediction markets. We've talked about them on the show before. But in the sort of narrow case of, like, who is going to win this football game, like, that is a service that I could get on DraftKings or FanDuel or, like, any sports gambling site. That specific prediction market, there's no, like, news there. It's just who's going to win the game and who's going to get paid out as a result of winning the
who's
game.
going to win the game is news, right? What's the value of why do people watch ESPN?
Right. I guess this just seems to me like a case in which you're doing kind of a regulatory arbitrage where you're saying because this is a prediction market, it's like a derivative contract. You're not actually betting on the game like you would in a sports betting thing, which would be illegal in some states. You're doing a derivatives contract, which you argue should be legal federally. The government disagreed. Why did they disagree?
I don't think they necessarily disagree.
Well, they told you to stop doing it.
I think it's just new and different. And so I think this story will play out. But at the end of the day, I think what you'll see is prediction markets are here to stay. I think some of the details around what types of prediction markets are classified in what category, I think will be worked out. But Robinhood will play a leading role in that because I think this is like a incredibly important technology.
What's the information that you've gotten yourself from prediction markets that's felt really useful to you?
I mean, one example was the election. So as you guys know, we rolled out presidential election market, and that was an incredibly successful product. And I think you can juxtapose the experience of looking at a prediction market for the election versus the actual news on election night. So on election night, prediction markets were at 95.5 Trump, and the news was giving you all of these details like, we got this result from this county, we found 2,000 votes. But you kind of just wanted to know who's going to win the thing. And I think if you want the news as fast as possible, you have to turn to the prediction markets, not the news.
Right. I would just say, like, prediction markets are not always right. I remember when the room temperature superconductor debate was going on, and lots of people got very excited about whether we had just discovered this LK99 thing that was going to revolutionize the world, and prediction markets went nuts. And for a time, it was seen as very high probability. But the news, the media that you're talking about, actually went out and checked it and said, does this thing work? And scientists tried to replicate it and found that it actually wasn't a room temperature superconductor. So in that case, the prediction markets were not a reliable indicator of what was true.
I mean, I'm not saying that prediction markets are always right. Like, nobody's going to bat 1,000 on anything. But what I'll tell you is they're the most effective mechanism that I've seen for synthesizing all the publicly available information.
I want to ask you about this narrative that we've talked about on the show that I'm sure you've heard before, which is that tools like Robinhood, which make it very, very simple and sort of gamified to invest in crypto assets and meme coins and other things, that they are essentially turning investing into a form of gambling and popularizing that, especially among young people. I'll put some cards on the table. I do think that we are becoming a nation of gamblers, and I don't know that that's a net positive for society, and I wonder how you feel when you hear that.
Yeah, I mean, a lot of people believe that markets are gambling, which I disagree with. And obviously, like, markets are in the name of our company. Like, we believe in financial markets. We believe that any product that is available to institutions, by and large, I mean, there's some exceptions there, should be available to retail as well, because access to markets, if you look on a macro level, access to markets has been one of the greatest sources of wealth creation for countries. Countries with more open markets have tended to outperform countries with closed markets. And so we believe in bringing that to retail, because even if there's like individual cases that are negative and negative externalities, by and large, the markets and opening up access have been one of the largest sources of wealth creation for countries and individuals.
What about things like Pump.fun, which is this new crypto platform that people, especially young people, are having a good time on, some of them? This basically makes it very, very easy to launch a new meme coin, to sell it. There have been lots of documented instances of people making tons of money on pump.fun, but also losing tons of money and getting scammed and rug pulled.
Yeah.
Do you see that as a good way for sort of democratizing access to financial instruments?
So here's my take on that. I think it goes to my original point of the power of the technology. So the idea that someone can create a coin in 5 minutes and it's traded globally, it's available across a whole bunch of exchanges and dexes and wallets, that idea is an extremely powerful idea, and it's a powerful technology. And you juxtapose that with the IPO process, which is cumbersome, incredibly expensive. I mean, not a lot of companies want to go through with it anymore because it's so, like, you have to deal with all these counterparties and banks and a roadshow. And I think that's a big problem because now you have companies like SpaceX and OpenAI that are worth hundreds of billions and are still private. So I think that has a negative impact on retail investors because the upside from investing in these high growth technology companies accrues only to the insiders that are able to get into the private company deals. Like, for example, I mean, you have NVIDIA, and that's been getting a ton of the retail interest and institutional as well. But OpenAI, Anthropic, companies like Perplexity, all private. And so that's why I think marrying the technology that allows you to create a coin in 5 minutes or less with real productive assets like private companies is so powerful. And I think we can solve the problems that you're indicating. I think there should be self-certification. Companies and projects should be able to provide disclosure. So, for example, if you are a late-stage private company and you have audited financials that are public-like, you should get into a higher tier of sort of disclosure. And, if you're a project that was created on one of these, meme factories, maybe you get like a big red skull and crossbones telling people like, be careful, this is not vetted, not verified. But I think people are smart and can make their own decisions. And I think that the platforms that offer these products, I think there are ways that they can actually provide the disclosure needed to keep customers safe.
Right, because this is the big difference between the public and the private markets. Is like ultimately we haven't seen audited financials for an OpenAI, for an Anthropic. From the exterior, it seems like they're doing well. They're raising billions of dollars. But if you're like a retail investor and you're just sort of like reading the news coverage, you are just kind of like throwing a wish in a fountain. So you're saying if we go through with this, then companies like OpenAI should have to offer some sort of public disclosure before people are allowed to start buying OpenAI coin.
Or they can opt into it. You don't want to have to force the companies to provide disclosure, but opting into a disclosure, I think will get you access to like higher tiers of placement.
I want to return to this idea of the nation of gamblers, of the ways that we are, in some sense, betting on more things more regularly as a country than we have at any point in our recent past. And
I actually bet Vlad $10 you were going to bring this up again, by the way, but go on.
I mean, part of what I'm struggling with here is that I hear you talking about democratizing access to markets. And I think on some level, that's a compelling argument. But then I look at what companies like Robinhood are actually doing and the kinds of investments that they are sort of making it very easy for people to make. And it does not seem like wise investments. So I got a few weeks ago an alert from Robinhood on my phone telling me that I could now buy the Trump crypto meme coin on Robinhood. I got another alert from you around New Year's saying that you were giving away Dogecoin to people who signed up for accounts. To me, that does not feel like responsible stewardship of a platform where people are investing their money. It seems like you are actively pushing people, your users, to invest in very speculative assets that are high risk and that they might not be prepared for.
Yeah, I mean, I think that my view is people should know what's available. I think that a lot of people wanted to buy that asset for a variety of reasons, right? I would dispute the fact that like we have the ability to coerce someone into buying something that they don't want to buy. The people that buy these assets do it because they have a fundamental belief in what it represents. And I don't necessarily
Or
think
they love to
that's-
gamble.
I mean, I think again, markets have a wide variety of participants. Some people, particularly with these memes, are buying it because they think it'll go up in the future, as with anything. But there are a lot of people that buy it knowing what it is because they want to support the movement that it represents. I mean, we're still working out these dynamics. I would say that in terms of what we allow and what we list on our platform, I mean, we don't have hundreds of coins like some of the other crypto platforms. We're like on the extreme sort of like
only the blue
selective
chip
end.
meme coins. Vlad, I do want to ask you one more question about the sort of effects of services like Robinhood and the sort of larger generational cohort that tends to do a lot more speculative investing. There's been some studies recently about the increasing prevalence of gambling addiction, especially among young men. There's a new study that just came out earlier this week in JAMA that shows that internet searches related to gambling addiction have increased significantly over the last few years. Anecdotally, I'm hearing from friends who are therapists who work with young men who say that the number of boys and young men who are coming in with gambling addictions has risen precipitously. And I wonder if you have any reservations about the way that Robinhood and other sort of financial platforms may be contributing to a growing public health crisis, especially among young men.
Yeah, I mean, since we're not in the gambling space, I'm less familiar about sort of like the ins and outs of gambling addiction. Obviously, there needs to be appropriate controls and services, and we have to make sure that customers don't get in over their skis. I do think, like, if you look at financial markets have had pretty robust controls around things like customer onboarding, know your customer, suitability, geolocation. So you make sure that, customers in one state can't have access to things that are not allowed in that state. So there is benefit to actually bringing it into a more regulated realm where a lot of these controls from financial services can be broadly applied.
Okay, so you're not opposed to like regulating people from, preventing them from making investments that might be against their own self-interest or that they might not be equipped to assess the risk of. Is that fair?
I think that I'm certainly in favor of suitability controls and sort of like various things, and those exist in the financial services world. I think that where it's tricky is when you start saying, preventing people from making investments that are bad for them, because then you get into the situation of like Massachusetts in the 80s banning its citizens from participating in the Apple IPO, right? And maybe objectively at the time, people said, well, that's IPOs are risky. This is an unproven technology company who uses computers. But then, 30 years from now, when your state has basically like been harmed in retrospect by that decision, it doesn't look so smart anymore. So,
are there any financial assets you think are too risky for retail investors to be allowed to buy and sell? Like, is there anything that you would say that's a little too crazy?
I think there's probably financial assets that we don't see a clear need for retail investors, or maybe a little bit complex to understand. For example, like you've got like different mortgage-backed securities and credit default swaps. But I'd say by and large, my thought is if an institution has access to it, retail should have access as well.
I've been thinking about buying up a massive amount of mortgage-backed securities and credit default swaps and just seeing what happens. So I'll keep you guys posted. I think we should end on a couple AI questions.
Yes.
So my first one is just, Vlad, you're in the tech elite. You're talking to all the cool AI CEOs. Based on what you think is coming, does it still make sense for the average person to save for retirement?
I'm very, very confident that despite the advances in AI, we'll still have a need for money and currency. People will still create companies. Maybe the AIs will create companies too. I think like regardless of what happens to the labor landscape, the job landscape, if there's disruption, I think that bodes well for the importance of investing and stashing away your money. And I think retirement becomes even more important.
Vlad, last question. You've got a new AI venture, Harmonic, which I was doing some reading on. It looks like an AI for math. Why did you start up this side quest, and how does this fit into your vision for the future?
Yeah, I think the big problem with AI models is that the current generation models will give you an answer in nearly all cases. But the problem is in how you can trust the output. How do you know that the output is correct? Are there subtle errors? And actually, math as a domain is a very interesting domain because unless every step in the reasoning is correct, the answer is very, very likely to be wrong. And the original goal was to build super intelligent AI that has verifiably correct outputs at every step in its thinking process.
So no hallucinating.
No hallucinating.
Yeah. And is that possible?
It's possible for sure. I mean, if you think about it, a calculator, right? Your calculator doesn't hallucinate. If you type in some math formulas, you're pretty confident that your answer is going to be correct and it's not going to hallucinate. So can you scale that idea to a calculator to more and more problems? Obviously, it's easy when you're adding big numbers, but can you do a word problem?
There are people who just
Casey
think
and Kevin are on a boat and they're going down a river. The river is going at, 5 knots. There's a wind. When are they going to get to the destination? Can you make like a super calculator that gives you the no hallucinations property of a basic calculator, but the flexibility of an LLM? I think that's kind of like the dream.
Yeah.
Well, I'm just saying, I'm not getting onto a boat with you anytime soon.
Vlad is actively fantasizing about throwing us in the river at this point.
Yeah. Well, I think that's as good a place as any to end.
Leave it there.
Vlad, thanks for coming.
Vlad.
Thanks for having me.
Hey, that's the end of this clip. If you liked what you saw, head on over to our page and subscribe, and you can get the full podcast. We do a show like this almost every week on tech and the future. Head on over there now and subscribe.